your business in the new world order. The mobile wave is changing the way we think about goods and services.
Michael Saylor is the chairman and CEO of business analytics software firm MicroStrategy (MSTR), a publicly traded business intelligence firm that he founded in 1989. He's also the founder of Alarm.com, ALRM, named inventor on 40-plus patents, and author of the book The Mobile Wave. One of the best-known executives of the internet bubble, Saylor was a multi-billionaire in the late 1990s thanks to his stake in MicroStrategy. He fell from the billionaire ranks after questionable accounting led to a restatement of financial results, and the dot-com bust crashed the stock. He's a billionaire again thanks to timely Bitcoin investments. In this video, we're going to discuss Michael Saylor reveals what no one is telling you about Ethereum price prediction 2021. The video is going to be amazing, so make sure you stick till the end. Michael Saylor is an American entrepreneur and business executive who co-founded and leads MicroStrategy, a company that provides business intelligence, mobile software, and cloud-based services. Saylor authored the 2012 book The Mobile Wave: How Mobile Intelligence Will Change Everything. A former rocket scientist, Saylor studied aeronautics and astronautics at MIT on an Air Force scholarship before founding MicroStrategy in 1989. He founded and serves as a trustee for the Saylor Academy, Saylor.org, a non-profit organization that has provided free education to 800,000 plus students. As of 2016, Saylor has been granted 31 patents and has 9 additional applications under review. He's an advocate for the Bitcoin standard, Hope.com. He has dual degrees from MIT in aerospace engineering and history of science. Bitcoin is a swarm of cyber hornets serving the goddess of wisdom, feeding on the fire of truth, exponentially growing ever smarter, faster, and stronger behind a wall of encrypted energy, Michael Saylor said. On MicroStrategy's quarterly earnings conference call in July 2020, Saylor announced his intention for MicroStrategy to explore purchasing Bitcoin, gold, or other alternative assets instead of holding cash. The following month, MicroStrategy used $250 million from its cash stockpile to purchase 21,454 Bitcoin. MicroStrategy later added $175 million of Bitcoin to its holdings in September 2020 and another $50 million in early December 2020. On December 11, 2020, MicroStrategy announced that it had sold $650 million in convertible senior notes, taking on debt to increase its Bitcoin holdings to over $1 billion worth. On December 21, 2020, MicroStrategy announced their total holdings include 70,470 Bitcoins purchased for $1.125 billion at an average price of $15,964 per Bitcoin. Google is what happens when we pool information energy on a software network. Everyone understands this. Bitcoin is what happens when we pool monetary energy on a software network. Few understand this, Michael Saylor said. As of February 24, 2021, holdings include 90,531 Bitcoins acquired for $2.171 billion at an average price of $23,985 per Bitcoin. Saylor, who controls 70% of MicroStrategy's shares, dismissed concerns by observers that the move is turning MicroStrategy into a Bitcoin investment firm or exchange-traded fund ETF. Everything's getting weird in the crypto world. The entire cryptocurrency industry dropped precipitously after Elon Musk's decision to quit Bitcoin. Bitcoin went down more than 30% to a low of about $30,000. Ethereum dropped by more than a quarter to $1,902. XRP, Litecoin, Bitcoin Cash, and almost every other cryptocurrency of note have seen huge drops. The sell-off caused such trading volume that Coinbase appeared to be down for some users. Binance, meanwhile, paused some withdrawals. The blockbuster Coinbase IPO, in which the company nearly instantly became an $85 billion tech giant, is one obvious point. The wild explosion in NFT prices was another. Another was Elon Musk hosting Saturday Night Live, or Musk tweeting about Dogecoin and Bitcoin relentlessly for weeks, sending prices in all directions with every 280-character missive. Musk's quick turn on Bitcoin for environmental reasons could have been the first sign of the crash. When he seemed to imply that Tesla might be selling all its Bitcoin, that was another one. Entities I control have now acquired 111,000 #Bitcoin and have not sold a single Satoshi. MicroStrategy's Michael Saylor tweeted, #Bitcoin forever. MicroStrategy CEO Michael Saylor told CNN that China was using clean, renewable energy through the production of hydroelectric power. It's a great success story. We're using energy coming off of dams that otherwise would be wasted and lost forever to the world. There's dirty coal in China. The Chinese have their own environmental goals and they're working to clean up all of their emissions. He said Iran was also working to shut down illegal Bitcoin mining. Mr. Saylor predicted that hash power would shift to the US and other parts of the world as expensive dirty comes offline. More and more of the hash power switches to clean, sustainable energy, and that's a great thing. Any jurisdiction that doesn't support mining will drive the hash power to jurisdictions that do support mining. Bitcoin is a solution to anybody that has cheap renewable energy and doesn't have a customer for it. He claimed Bitcoin is the greatest customer for renewable energy in the world, in the history of the world. Michael Saylor is convening a meeting between Musk and various miners, and note this specifically cites ESG considerations in the second tweet. So now you'll have at least some Bitcoin industry leaders trying to make a point of sounding green or ESG friendly. In a conversation at CoinDesk Annual Consensus Conference, Michael Saylor, chairman and CEO of MicroStrategy, disputed claims that the newly formed Bitcoin Mining Council, featuring some of North America's largest Bitcoin miners and spearheaded by him and Elon Musk, could lead to the industry's centralization. The controversy stemmed when Saylor and Musk both announced on Twitter that they held a meeting with executives of major Bitcoin mining operators in North America, including Argo Blockchain, Galaxy Digital, and Marathon Digital Holdings, among others. The miners formed the Bitcoin Mining Council to promote energy usage transparency and accelerate sustainability initiatives worldwide. Though the participants collectively control less than 10% of the global computing power on the Bitcoin network, the news immediately caught fire and faced criticism. This move has absolutely nothing to do with green energy or climate. It has everything to do with control, wrote Marty Bent, co-founder of Great American Mining, in his newsletter shortly after the announcement. Speaking at the conference, Saylor noted in response to critics, "The only reason we had the meeting is that we wanted to ensure the success of a decentralized cryptocurrency, and the source of decentralization is energy usage." He also called concerns over the sustainability of energy sourcing the existential threat to Bitcoin. To the extent that we want to defend Bitcoin, we need to manage any concerns, especially from uninformed parties concerning energy usage, making sure that people who are hostile to Bitcoin and the crypto industry aren't defining those narratives, models, and metrics. In the absence of any good information or any response on our part, they will define those models, fending off the closed-door nature of the gathering. Saylor quipped, "If it was a secret meeting, I wouldn't have told millions of people the next day." What's interesting too is that while Bitcoin leaders Elon Musk and Saylor start to tout their green bona fide, the Ethereum world is starting to sound like hard money types. A lot of people are talking about this Packy McCormick blog post about upcoming changes to the Ethereum protocol, one of which includes a plan to slowly shrink the available number of coins out there. Substance aside, this is part of the new Ethereum rhetoric. But EIP 1559 and ETH2 flip that. With ETH2, new issuance to reward validators is expected to drop dramatically versus proof-of-work rewards. With EIP 1559, by burning ETH in every transaction, assuming a conservative amount of daily transaction fees, and that 70% of the gas fee is burned and 30% is sent as a tip, then more ETH will be burnt than issued every day. Together, the supply of ETH will actually begin decreasing after EIP 1559 and the ETH2 merge. It's better than sound money, it's ultrasound money. So you have Michael Saylor talking about ESG, and you have Ethereum bulls talking about ultrasound money. Not sure what it means, but it sounds like the end times. With no underlying asset or particular restriction to keep it moored, cryptocurrency trading is a pure momentum game. Prices going up leads to excitement, leads to prices going up, and prices going down leads to panic, leads to prices going down. Bitcoin believers see another dip in the inevitable rise of cryptocurrency, while skeptics see the world finally seeing the emperor with no clothes on. What is your opinion about Michael Saylor, his wealth, and his strategies? Let us know your opinion in the comment section below. This was all for today. Hope you liked the video. Don't forget to subscribe to our YouTube channel, hit the bell icon for more updates and notifications. Stay safe, and we'll be back soon with another video.